Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Clean out everything. U.S. President Trump reportedly says he wants to completely replace Iran's leadership structure. He says the U.S. has destroyed Iranian navy and air defenses. Prepared for any scenario. Iran, meanwhile, says it's ready in the event of a U.S. ground invasion as it steps up its attacks in the Gulf and prepares to elect a new leader. And we cap off a volatile trading week with Asian stocks erasing losses and the dollar and oil declining as the war enters its 7th day with little reprieve in sight. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. It is Friday. It is the 7th day of the Iran war, and we continue to see global reverberations, markets reacting to the energy shock, the supply chain shock that's coming from the region. And you look at the markets today, S&P futures leaning towards the green, up 0.2%. But obviously, over the course of the week, we have pulled back. Not a lot, I will say, in the grand scheme of things. The U.S. equity index is down just a little over 1% compared to the more severe drawdowns that we had in European equities, also Asian bourses as well, down anything from 6 to 7%. So the U.S., the relative actual outperformer this week. And for those who are still watching data, we do get NFP this afternoon as well. And the expectation is a headline jobs growth figure of 55,000, which would suggest some moderation in terms of jobs creation. So something to watch out for outside the geopolitical realm. Asia Pacific this morning, handover flattish. But again, throughout the course of the week, we have seen a substantial pullback. The main news as well, and perhaps this is a marginal benefit for Asian economies, is the fact that, and specifically India, is the fact that President Trump has announced a waiver on India to buy Russian oil for 30 days. So a bit of a positive reaction for some of those Asian economies, but most notably India in the overnight session. Brent also keeping a close eye. We've pulled back a little bit on the announcement of that waiver, but we're still basically close to $85 here. We're up about 20% just over the course of the past week. And so, yes, it has perhaps supplied a little bit of relief to the market. But looking at some of the analyst commentary that it's coming through, I think most people have the view that unless the strait fully reopens, we're still going to be in a squeezy situation for oil. And then the USD this morning taking a bit of a dip, down 0.8%. But again, the theme there has been a bid for the US dollar. Switching over, I do just want to point out, going back to what I was saying about the closure of the strait and the fact that it is having an impact on inflation expectations. The yellow line is the spike in the price of oil. The blue and the white is the reaction that we've seen in the USD this week and 10-year yields as well. We've seen both of them go upwards. So USD, safe haven, and then U.S. yields accounting for a higher inflation scenario. So that's what's been happening more broadly with some of these assets. All right, let's also check in further on how some of these markets in Asia are faring. Winnie Su is in Hong Kong for us. Winnie.
Yeah, morning, Jumana. As you mentioned, we are seeing a bit of stabilization in the Asian market today, and actually even maybe a bit of market fatigue after what has really been a roller coaster for the region. And we're talking about weekly decline of more than 6%. So that's the worst in 6 years, while the S&P looks way more resilient compared to our region. And when it comes to some of the key gauges, we're looking at, for example, the Kospi here down still about 1%, taking its weekly losses to more than 10% despite that big rebound yesterday. And the brighter side of things, you've got the Nikkei 225 gaining on some dip buying. But the really the standout here are some of the tech stocks in Hong Kong and up about 3%. And that's helped by the better than expected earnings from JD.com. So lifting the overall sentiment in that sector. Now, sticking with tech, we flip the board and take a look at some of the other interesting dynamics that we're seeing that's really playing out. On the chip sector, you're seeing Samsung Electronics and SK Hynix down. We've got that Bloomberg scoop that the U.S. is considering asking companies to seek approval when it comes to their AI chip exports. However, on the other side of things, you're looking at software shares gaining on that report that OpenAI is scaling back its ChatGPT shopping plans. So that is actually easing some concerns around the AI disruption and hence that rotation back into software and away from hardware. Back to you, Jumana.
Winnie, thank you so much. Winnie Su in Hong Kong. As the seventh day of the Iran war begins here in the Middle East, there's little sign of a reprieve. Israeli airstrikes hit Tehran and Beirut, while Iran targets several Gulf neighbors, including Saudi Arabia, Kuwait, and Bahrain. In Washington, President Donald Trump said the U.S. continues to totally demolish Iranian forces, while Iran's foreign minister tells NBC that the nation is ready for anything.
Their Navy is gone. 24 ships in 3 days. That's a lot of ships. Their anti-aircraft weapons are gone. So they have no air force. They have no air defense. All of their airplanes are gone. Their communications are gone. Missiles are gone. Launches are gone. About 60% and 64% respectively.
And we are prepared for any other eventuality, even, a ground invasion. So our soldiers are prepared for any scenario. When I said that we are waiting for them, it didn't mean that we are waiting for continuation of the war. No, but we have prepared ourselves to confront with any scenario, with any eventuality, any possibility, and we know that we can handle that.
Trump has also weighed in on the future of Iran's leadership. For more, let's bring in Patrick Sykes, our breaking news editor in Istanbul, and Dan Williams in Israel. Patrick, I'm going to start with you. Iran continue to be defiant in the face of receiving a considerable amount of hits and damage to their air defense, to their navy, as President Trump was just describing right now. And all this as we await to hear news on who the successor to the supreme leader is going to be. What is the latest?
Yeah, absolutely. It's worth remembering the only other time the Assembly of Experts that will elect the Supreme Leader has done this before was 1989. That time it took less than a day from the death of the previous leader. Now, obviously, in wartime conditions, it's much more practically difficult to get them all together or conduct voting remotely with all the conflict going on, not to mention surveillance that will be happening of telecommunications. I think there's a couple of names to keep an eye on. The most prominent one would be Mojtaba Khamenei, the son of the former supreme leader. He gets a lot of attention for that family connection, but of course it could also be a hindrance for a regime that emerged in opposition to a dynasty and the monarchy. And then there's two others that are both in the temporary leadership council that's currently running the country, Ejei, the head of the judiciary, and Arafi, who was brought in as another appointed cleric, both considered pretty hardline. So for now, the most prominent names under consideration aren't indicating, I think, the kind of softening of stance that Trump mentioned overnight he'd like to see.
Let's get out to Dan now. Dan, again, to pick up, mirroring what President Trump said yesterday, the IDF chief of staff also said that strikes have managed to successfully neutralize around 60% of Iran's ballistic missile launchers, but then also said that IDF are moving into the next phase of operations. Do we understand what this next phase looks like?
To judge from what was said yesterday by the IDF chief, this would be a concentration in concert with the United States on remaining military assets in Iran further inland. Operations so far have naturally focused on the western part. That's where obviously the Iranians would want to position most of their air defenses, most of their offensive capabilities, as that's the enemy-facing part of Iran. The allies say they've now dealt with that handily, and they are on what they would describe as mopping up operations against further regime assets deeper into the country. I think there's also some indication the Israelis, like the Americans, perhaps other powers more quietly involved here, are looking at post-war options in terms of a leadership that would follow the mullahs if they manage to topple this regime. And there's some indication the Israelis are focusing more clandestine attention on the Kurds of northwestern Iran as a potential proxy force, an armed militia that would help topple that regime from within, possibly contribute to its replacement.
And Dan, let me ask you about the latest developments in Lebanon as well. Some reports coming through overnight that there has been a series of bombardments of southern Beirut. the southern part of the country and also areas in the Be'er as well. This alongside mass scenes of displacements of Lebanese residents trying to rush and flee to safety. Just talk us through what is happening on that front.
It's worth noting in the Iranian context that this appears to have been the first night in which there were no Iranian missile or drone launches against Israel. The smattering of sirens were in northern Israel, apparently caused by Hezbollah drones from Lebanon. That is the second front of this war for Israel. It may actually prove to be the more dominant front, given the Israelis now appear to be mustering forces on the ground, having inserted some 3 days ago after Hezbollah joined the fight on behalf of its Iranian ally. And that presence now, that increased troop presence in southern Lebanon, has a border protection aspect to it. However, given what you noted, the widespread evacuation orders by Israel, the flight of so many civilians northward to the Lebanese interior, it would appear the Israelis are preparing an option of an invasion there, perhaps an establishment of a new buffer zone, perhaps a long-term occupation. Israel is not saying this, it's not confirming it, it's not ruling it out either. And indeed, the Prime Minister just 2 days ago signaled to the government in Beirut that it may have a last chance to crack down itself on Hezbollah internally and prevent what would be a very destabilizing invasion, mass incursion by Israeli troops into that country.
Patrick Sykes, our breaking news editor in Istanbul, and Dan Williams in Israel. Thank you so much. Meanwhile, the Trump administration is weighing a range of options to address the spike in oil and gasoline prices, as well as insurance guarantees and naval escorts to ensure safe passage for oil tankers. A range of options have been discussed. That includes releasing crude from the country's emergency oil reserve, potentially in coordination with other nations to maximize the effect. Joining me now is Amos Hochstein, managing partner of TWG Global and former senior advisor to President Biden, and very familiar, of course, with the region. Amos, good to have you on. I want to start actually with the energy news of the day, which is the fact that President Trump has now granted this waiver to India to buy Russian oil. It is a 30-day waiver, but it also constitutes a major walkback from the position that the Trump administration had, and that it wasn't so long ago they were talking about applying extra 25% tariffs on India as punishment for buying this Russian oil. What do you make of the decision?
Well, I think first, Joanna, it's good to be with you. Look, I think it first indicates how concerned the White House is with the rising oil prices. If you don't look just at the last few days since the war started, but since we started talking about maybe going to war, so in early January, late December, when prices were around $60, $62, $63, we're $20 north of that right now. But what's more important to me is the complacency that right now in the market that we have. People in the market think that this is like, oh, this is like the 12-day war, this is like Venezuela, it'll be over soon, or we can do some cosmetic changes like this waiver. But when you take out so much oil, such a massive volume of oil and natural gas and refined products and fertilizer off the market for such a lengthy period of time, if it keeps going for a few days, it's not about whether you can buy some Russian barrels off of ships, but rather, will there be shut-in of production in Saudi Arabia, in Kuwait, in Qatar, in UAE? Mm-hmm. And once you shut that in, it's very much harder to bring that back on than it is to shut it. And so I think if we go into this weekend with these prices, but on Sunday night when oil prices start trading again, if the straits are still closed, I think the spike will be much more significant.
So let me ask you this. If you do think the price is going to be a lot more significant, how influential is the price of oil going to be in determining the duration of this war?
Yeah, I think that's the million-dollar question. Right now, you have two forces that are fighting this war, Israel and the United States. It's very easy to be able to figure out what the national security rationale for this war is for Israel, and it's very popular in Israel. In the United States, Americans are still confused as to why we're in this war to begin with. Is this in the interest of the United States? So when you add to that confusion, and again, this confusion is with the fact that most people believe the Iranians are an evil regime that has enormous amount of blood on their hands of civilians, including many Americans. So no sympathy for Iran here. But understand between that and understanding why we're at war, and then you add a cost of energy prices, which goes to electricity and food and gasoline and a lot of other commodities throughout the economy. I think people say, am I willing to be able to pay for this? And there's going to have to be a way for the administration. It's going to have to explain and to demonstrate that it is either very temporary or that they'll be able to mitigate the cost for the American public. That is a very difficult thing to do in these kind of circumstances.
Yeah. How do you think the U.S. administration is going to define success in this instance?
Well, I think we have two options here. One is success by saying that the regime is gone, it has collapsed, and there is a new regime in place, which is difficult to do without troops on the ground. The other is to declare victory at some point and say unilaterally, look, we defeated their navy, sank all their ships, we destroyed their air force, the leadership has been decapitated, their missiles have been mitigated and destroyed, most of their launchers and missile capacity, the nuclear has been destroyed, and we are stopping this war now, and the Iranians need to change their behavior into the future, or else we will come back. So those are the two options here.
Yeah.
Either you change the regime or you leave it intact but weakened.
How do you think the Gulf states are going to view this moment in time, and the fact that the UAE specifically has actually been the recipient of more drones and missiles than any single one of its neighbors? None of these Gulf countries were involved in launching the initial operations, the joint U.S.-Israeli operations on Saturday morning. How does the Iranian retaliation reshape the region for years and decades to come, do you think?
Well, I think there's a number of consequences that we're going to have to deal with for a long time. One, the UAE has sustained an unbelievable bombardment by the Iranians. And as you said, for no reason whatsoever, except to put pressure on the region and on Donald Trump and the Israelis to limit the war's scope and length and duration. And remarkably, the UAE has been able to defend itself rather remarkably well. But I think that no matter what happens at the end, the relationship between Iran and its Gulf neighbors is going to be severely hampered for a very, very long time. The trust will be gone. They have just sustained a massive attack. Now, the question becomes, how long does this go? If this sustains for a few more days, several more days, the economic harm to the region will not be able to be repaired all that fast. So I think that you have to watch the issue of duration of both the ability to close the straits de facto and their ability to continue to launch the missiles. As we know, tonight, Israel has sustained almost no missiles from Iran for the first time. Clearly, Iran's ability to launch missiles is starting to diminish. But I don't think they're done yet. So the question becomes how much longer? And this is of grave concern for the region. I think they're willing to sustain this because they know that this regime is no longer one that they can work with in the future.
Yeah. Amos, I want to round up asking you about the other front that's opening up in Lebanon. And to our point, to what my colleague Dan was just saying, it's actually in some respects now become the more active front as far as the IDF are concerned. Look, I think most people that you talk to, the majority of the people you talk to will say that Hezbollah inflicted this on the country by choosing and voluntarily deciding to get involved in the war. The question is, how far is this going to go? And do you actually foresee a situation where we go back to those pre-2000 years with Israel and IDF establishing a buffer zone or an occupation in the southern part of the country? How do you see this playing out for Lebanon?
Well, Jumana, as you know, I was the one that negotiated the ceasefire a year and a half ago in November of 24 between Israel and Hezbollah. Hezbollah launching the rockets 2 days ago and joining the war voluntarily against the demand from the Lebanese government and the Lebanese people was a betrayal of Lebanon. Hezbollah has always been a parasite on the state, but has now become an enemy of the state. The president of Lebanon, the prime minister, the cabinet, including the Shia leader of parliament, Nabi Berri, all said Hezbollah may not take action at this time, and they did anyway. And so they are now acting against the interest of the Lebanese, not against the interest of Sunnis or Christians, but against the interest of all Lebanese. My concern is that if they don't stop this, this will be used as the reason for Israel to establish that buffer zone, to occupy the south for the foreseeable future. And the government of Lebanon need to step up. They have taken courageous steps politically. They have begun arresting Hezbollah members. They need to deploy the Lebanese armed forces to stop the Hezbollah from continuing to drag Lebanon further and further into this war.
Amos, thank you so much for your time. Amos Hochstein, managing partner at TWG Global and former senior advisor to President Biden. Thank you. Well, Asian stocks erasing earlier declines on the final trading day of a volatile week. Brent crude lower today, but still heading for its biggest weekly surge since 2022. For more insights, Trinh Nguyen, senior economist for emerging Asia at Natixis, joins us from Hong Kong. Trinh, again, I also want to start with the big news of the day with you as well. How much of a relief is this waiver for India as it pertains to their ability to now buy Russian oil over the next 30 days?
I think it's a temporary relief, in my opinion, particularly if the duration of the conflict drags on, which means globally we're short oil. And should it drags on, it means that oil prices will continue to rise. And it's just not just oil, but also gas. For India itself, it's not just exposed via net energy deficit. It's also through workers in the Middle East. And therefore, we're looking at 1.2% of GDP in remittances being affected. Across the region, we are net oil importers. We're also very trade dependent. And at the same time, we're exposed to remittances and tourism. And as a result, the duration of this conflict will impact Asia quite severely should it go on.
How much of a terms of trade shock are we talking about for these Asian economies? You mentioned that the lion's share, the majority of Asian economies are net oil importers. How big of a shock are we talking about, say, if oil stays around these levels? And I'm not even talking about a further price hike.
It's going to increase. We're already looking at oil prices and inflation rising in March. And at this level, if the conflict duration is 2 weeks, then you could have oil spike and then normalizing to a lower level. But if it is sustained, it is a big shock. It's not just a shock that oil prices will further rise, but the fact that ultimately it will lead to demand destruction. And as a region that's dependent on trade, we're not looking at import prices going higher. We could potentially looking at export decelerating also at the same time if supply are shocked and costs are going higher. The second round effect, of course, is food prices. The Middle East is very important for fertilizer, and that second round would push up food inflation. Thailand, for example, if you include transportation and food, that's greater than 70% of the CPI basket. So we do think this is a significant shock for the region and is at the eye of the storm. It is one in which that across the region, there's a lot of concerted efforts to try to shorten the duration of this conflict so that we're not just impacted via oil, but also via trade, tourism, and remittances.
Yeah. Let me ask you about one, I guess, possible mitigation, which is the fact that many of these economies, not all of them, are actually sitting on ample strategic reserves. Again, to what extent does that go to buffer the potential oil shock that you could see on those specific countries?
The first steps you already saw, which is protectionism. Thailand, China, both wanted to stop the exporting of refined diesel and gasoline. I think that is going to escalate to widen to other countries. The releasing of reserves, of course, will be very important, but they'll wait to see how long this conflict will last. If it lasts a long time, then they want to make sure that they don't use all their bullets at once. So as a result, I don't think that the region will release the reserves for now. The second thing to remember is that Japan has a really huge oil reserve, so is China, and so is India. But gas is the reserves themselves are much less. And so in the short term, this is going to be a significant headache for countries. And for countries that have even much less, like Pakistan, that is a huge challenge, and so is Bangladesh. So we're seeing a divergence of performance across emerging markets, emerging Asia at the moment, and how prepared they are for the shock. Even if you're most prepared, you're still going to be impacted because you're not going to use this bull as a one just in case the conflict drags on, for example, for 3 months, which means at that point the reserves would be released to be mitigating the rise of oil. At 84, 85 level, I think it's still not that high if you consider relative to the 2022 conflict. High oil and gas certainly is higher. There's a supply shock, but certainly that that buffer is not going to be used at the moment.
Trinh, I've got about a minute, but let me just ask you this. The lower growth target out of China, how much of is that a concern also for Asian economies?
I think the key concern here is that everyone is looking at external risks and not really working on boosting domestic demand. China obviously is very important. Everyone looks at the appreciation of the renminbi as hope that finally it's going to pivot to consumption. But the reality is consumption is not so important right now. It's really defense and debt and making sure that it's slowing at a stabilized level. It's looking at not just oil as a shock and gas as a shock, but really global trade. China is exposed to this conflict via trade across Asia. We are. And therefore, what is being disrupted in the Middle East is not just oil and gas, but really global supply chains. And that's a big threat. And so therefore, everyone is looking at mitigation factors rather than boosting growth.
Trinh, thank you so much. Trinh Nguyen, a senior economist for emerging Asia at Natixis. So when we come back, we're going to talk more about the conflict with Iran, which shows no signs of abating. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Clean out everything. U.S. President Trump reportedly says he wants to completely replace Iran's leadership structure. He says the U.S. has destroyed Iranian navy and air defenses. Prepared for any scenario. Iran, meanwhile, says it's ready in the event of a U.S. ground invasion as it steps up its attacks in the Gulf and prepares to elect a new leader. And we cap off a volatile trading week with Asian stocks erasing losses and the dollar and oil declining as the war enter its 7th day with little reprieve in sight. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. The war entering into its 7th day with the ongoing joint U.S.-Israeli operations in Iran. Iran continues to strike back mostly at the Gulf states. Very little activity being reported in Israel overnight. A lot of it being directed at where we are in the UAE, in Qatar, in Bahrain, Kuwait, Saudi Arabia. All of that has continued overnight with more drones being intercepted reportedly. So the knock-on effects, we felt it most definitely in global markets over the course of this week, but perhaps less so in the U.S. S&P futures leaning towards the green now, up 0.2%. Cautious handover from Asia Pacific this morning, but over the course of the week, we of course did see a considerable downtrade for those Asian indices, especially the Kospi. It's been extremely volatile this week. But the main news overnight as it pertains to energy markets is the fact that President Trump has now said that they're offering India a 30-day waiver to be able to buy Russian oil. So on the back of that, you saw the oil complex dip a little bit, down 1%. We were at one point down 2%, so we pared back some of those losses. And ultimately, experts in the space are saying that as long as the strait remains closed, as long as energy infrastructure sites continue to be targeted, you're going to continue to see this upward pressure coming through on the price of oil. We're up around 20% over the course of this week. $85 a barrel is where we are. And then the USD is slipping a little bit this week. And bear in mind, in terms of data today, we do have non-farm payrolls for anyone watching out for the data in the U.S. And I will just note that markets have repriced how many rate cuts are priced into the U.S. yield curve now. We're only looking at about 40 basis points cumulative by the end of 2026. Why? Let's flip the board. Let me show you why. because of the inflation impact. Higher oil prices, higher gas prices, the knock-on effect to other products as well that are derived from gas, fertilizer, and so forth, knock-on effects for many commodities around the world. And so the market has been quick to price in an inflationary shock. You're seeing it in yields, and you've also seen it transpire with the bid for the USD. So the oil spike has lifted both US yields and the dollar. Now let's go back to the political and geopolitical developments. A barrage of Iranian missiles and drones targeted at least 5 Mideast countries overnight, where citizens were urged to take shelter. Earlier this week, NATO forces shot down a ballistic missile headed towards Turkey, and Iran denies involvement. Meanwhile, Bloomberg has reported the U.S. and Israel are considering involving Kurdish forces to take up positions next to northern Iran as they carry out airstrikes in Tehran. Now, earlier today, I spoke to David M. Satterfield, former U.S. ambassador to Turkey and director of the Baker Institute for Public Policy at Rice University. I began by asking him about the potential involvement of such forces and what that would mean for the U.S.-Turkey relationship.
Turkey would be quite concerned at the emergence in Iran, at points adjacent to the Turkish border, of a very militant, fragmented, at times, given the composition of Kurdish militias, plural, quite radical forces, many of which have been allied with al-Qaeda and jihadist groups in the past. Turkey would be concerned at such a phenomenon. But I have a broader concern, which is the consequences of external forces, should they be doing it, motivating this a mix of militias who have their own self-interests in creating chaos within Iran. It's a matter of be careful what you wish for. If chaos is the outcome, if violence is the outcome, directed primarily at the Kurdish ethnic population of Iran, what's the advantage? What's the gain there? I think this is something that needs to be looked at extremely carefully.
Mr. Ambassador, I know you were also in Lebanon for a few years under both the Clinton and Bush administrations. I want to ask you your thoughts on what is going on there and the fact that Hezbollah fired that missile across into northern Israel, began and opened up a new front in the war. And right now, what we are seeing is IDF are retaliating quite forcefully. Where do you see this going for Lebanon?
Let's make the first point. This was an unnecessary opening of a combat front. Israel had made very clear formally to the government of Lebanon that if Israel was not attacked from Lebanon, Israel would not take the first strike. Hezbollah, perhaps under the influence of the IRGC in Lebanon, took the step which I would regard as absolutely suicidal from any rational standard of self-interest on the part of Hezbollah, to fire 3 rockets, 2 of which landed in an open field, 1 of which was intercepted. And return, the current conflict has been brought back upon Lebanon. I think we can, all of us, recognize, acknowledge, and offer respect to the government of Lebanon's a unanimous decision to take steps to make illegal the possession of weapons by Hezbollah, to arrest IRGC officers who the media are reporting are fleeing Lebanon now. Hezbollah brought this upon itself. Sadly, in the course of bringing this upon itself, they also bring it upon the innocent people of Lebanon. But they asked for this, they're getting it.
That was David M. Satterfield, former U.S. ambassador to Turkey and director, Baker Institute for Public Policy at Rice University, speaking to me earlier from Houston. As the 7th day of the Iran war begins, there's little sign of a reprieve. Israeli airstrikes hit Tehran and Beirut, while Iran targeted several Gulf neighbors, including Saudi Arabia, Kuwait, and Bahrain. Joining us now is Foad Izadi, University of Tehran Professor. Good morning to you. I've got to ask you, what is the Islamic Republic's objective here, and why has so much of the retaliation been directed at the Gulf states?
You know, we have lost over 1,400 civilians, including 165 little girls when their school was hit a few days ago. We are dealing with the Epstein class. They like to rape little American girls, and they like to bomb.
I'm going to jump in there. I'm going to jump in there. I'm not going to. This is not the avenue to make blanket claims, but I do just want to give you the chance to respond to the question as to why specifically the Gulf states have been receiving so many of these projectiles from Iran.
CNN still does investigations. They did it on the school. They said it was an Israeli operation, killing 165 girls. When you lose 1,400 civilians, you have to respond. This was not a war Iran wanted. This is a war of choice by United States and Israel. You have probably seen the Omani foreign minister's interview with CBS News. He said that an agreement was available. He said that Iran is giving concessions that Iran was not able to give in 2015. He basically begged Trump not to start a war against Iran. And Trump attacked Iran 24 hours after that interview. They want to change Iran's government. It's understandable. If you want to change a country's government, you would not enter a diplomatic agreement with that government. Iran is hitting U.S. bases in this part of the world. That's what we have available to us. Iran is hitting.
Yeah, but let me just give me a moment there, because Iran isn't just hitting U.S. bases. Iran is hitting energy infrastructure. Iran is hitting logistics sites. Iran is hitting key transports and the airports around the key Gulf states as well. And every day we wake up to news of these Gulf states intercepting drones and missiles coming from Iran. I'm just trying to understand why the Gulf has been the recipient of so many of these projectiles. What is the rationale there? Because it's not just being directed at U.S. assets.
Iran is also hitting hotels. If you evacuate a hotel and put American soldiers there, that is going to be a legitimate military target. Office buildings that are headquarters of CIA in the middle of Dubai or other cities, these are legitimate military targets. And these countries, as you reported correctly, are shooting down some of these drones and missiles. The debris falls in places that Iran did not intend them to fall. The best way to avoid that is to stop shooting down Iranian missiles, because they are not targeted at these countries. They're targeted at American soldiers. The U.S., in opinion of Iranian leaders, needs to pay enough price for attacking Iran. So the cost should be high enough so they don't attack Iran every few months like they did. It's very reasonable.
Yeah, I mean, just to reiterate, none of the Gulf states were involved in the outset of these operations on Saturday, and they have all reiterated that they have the right to self-defense. Let me ask you about who is likely to be the successor to the Ayatollah. Mujtaba Khamenei is the name that's been going around. What is your expectation?
You know, normally it takes just a few days, 2-3 days for the country's new leader to be elected. The United States and Israel bombed the building that they gathered. They want to kill. These are countries' representatives. They were elected by popular vote, 88 people. Their job is to elect the next leader, but the U.S. government wants to kill these people. And Trump yesterday said that he wants to be involved in electing Iran's next leader, which is very strange. I hope you get an American guest and ask that person, why would the president of the United States wants to be involved in choosing the leader of a different country? And they have not been able to do the job because of bombings. This morning, we had heavy bombings in Tehran. Thank you for your sympathy. And the country will elect a leader once security situation allows it.
University of Tehran Professor Foad Izadi, thank you for joining the show. Coming up, oil prices are heading for their biggest weekly surge since 2022 as the war in the Middle East continues. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Sustained higher oil prices resulting from the conflict in the Middle East may fuel inflation in South Africa, though the buffers built in by the government should help keep its debt consolidation plans on track. That was amongst the views expressed by Enoch Godongwana, the nation's finance minister. He spoke with Bloomberg's The Opening Trade.
The question is, have you built sufficient buffers in order to absorb these shocks? The answer is yes. But as I've indicated, oil prices, if they begin to go up, South Africa is a price taker, and that will have implications, particularly inflationary impact for us. So the war is worrying.
What are the potential implications for the debt profile of South Africa, which has been rising, and then, of course, you and your government have pledged to stabilise debt levels? Can you continue to commit to that in this environment?
I think we will continue to commit to a debt stabilization process. Of course, we'll have to take into account what the nature of the shocks. At the moment, we have not been able to model the shocks, but we'll have, as time goes on, we hope that it's going to be 4 weeks, as President Trump has said. If it is 4 weeks, then it's going to be fine. But if it goes beyond 4 weeks, we'll still have to pencil down the implication.
So if it does continue, Minister, what assurance can you offer investors that the short-term fiscal pressures that might result from the conflict won't crowd out structural reforms?
No, structural reforms, for now, we have been doing them now for 6 years. We started the structural reforms in what is called Uvulindlela program in 2020. We've been going through this course. I don't think there's any possibility of a reversal of the structural reforms. The journey continues. I can tell you now, even if tomorrow there will be a change of a minister of finance, anybody, this thing has gained momentum. I don't think it's likely to reverse.
Minister, we've seen global rates rising as markets everywhere seem to factor in higher inflation, and bond yields have been going higher. What impact would higher borrowing costs, if that's what endures for South Africa, what kind of impact would you be thinking about for the South African economy?
We're coming from a high borrowing cost environment. If you look at what we were in May last year when we presented the budget, and now it's huge change. So we think that we've built sufficient buffers, as I've indicated, to sustain that. But there's another positive side to this development, in the sense that while we will have those problems, there's analysts are telling us that we are likely to see an uptick in terms of commodity demand and prices, and we're a commodity producer. We suspect that we'll also benefit from that.
That was South Africa's Finance Minister Enoch Godongwana speaking to Bloomberg TV's Tom McKenzie, Anna Edwards and Lizzie Burden. And just in the last few minutes, we have got a statement from the Joint Maritime Information Center. They've been commenting on the Strait of Hormuz, and what they are saying is Strait of Hormuz shipping traffic at near total halt. So this is the assessment from the Joint Maritime Information Center, essentially saying that it's effectively shut down because vessels and tankers are choosing not to pass through the strait. So at a near total halt. And on the back of that, oil prices heading for their biggest weekly surge since 2022 as the war in the Middle East unleashes a wave of disruption across energy markets. Despite President Trump's pledge to provide naval escorts and insurance guarantees for tankers in the Strait of Hormuz, shipping traffic through the choke points, which handles about a fifth of global seaborne oil flows, had slowed to a near standstill. For more, we're now joined by Ziad Dawood, Bloomberg Economics Chief Emerging Markets Economist. Well, I mean, there you have it. You know, you also have this institution saying that it's effectively the strait has been closed down. We're seeing big ramifications across energy. How much of the shift upwards in the price of oil is accounted for by geopolitical premium versus an actual shock to physical supply at this point?
I think there's been an actual shock to physical supply and actual disruption to energy production from the region. The Strait of Hormuz is all but shut down now. We've had attacks on energy facilities in the region, whether that's in Saudi Arabia, Qatar, or the UAE. Storage facilities in the region are getting filled up. And some countries are cutting production. Iraq is cutting production because it can't get its oil out of the region, and storage facilities are filling up. And Qatar has shut down the largest LNG facility in the world. I think the surprising thing, Jumana, is that not that the fact that oil prices have gone up to $85 per barrel, is the fact that given the level of disruption, they haven't gone up higher.
So, it's interesting because the president is trying to come up with these mitigating factors. We had the news for India overnight. 2 days ago, he was talking about providing those naval escorts. But Ziad, in a scenario where this disruption persists, the strait effectively stays closed, what does it mean for inflation and for global growth? How are you thinking about the knock-on effects?
The short answer is this, Jumana. When you have such a shock in oil prices, it does two things. It lifts prices for everyone in the world, and it shifts incomes from oil importing nations to oil exporting nations. And that creates winners and losers. If you're in the US, which is now given the large production from shale oil, the growth hit is going to be small, but consumers are going to feel the increase in prices of energy. And if they spend more on energy, they spend less on other items. If you're in China or Europe or India, big oil importers, you'll get the hit to inflation, higher inflation, and you get the hit to growth. Incomes are going to come down. But also, this environment creates winners. If you're an energy producer and you're outside the Middle East, higher oil prices are giving you higher revenues. And countries that are benefiting from this are countries like Russia, Canada, and Norway. And we've seen the news, for example, now, just a while ago, that India just got a waiver to be able to import Russian oil. So this environment in general, it hits consumers, but it benefits producers of oil. And there are winners and losers in the world from this.
Yeah, absolutely, as there always are. And we have that chart up in front of us displaying who those winners and losers are expected to be. Ziad Dawood, thank you as ever for all the work that you do on this. Bloomberg Economics Chief Emerging Markets Economist. Well, Bloomberg Originals has been looking at how this war and the spike in oil prices is looming over the U.S. elections this year and how it could reshape President Trump's political ambitions. Here's a preview. When we look back at this war, people will see it as a game-changing event for the region. There hasn't really been a precedent ever in history where the response out of Iran has involved as many countries as we're seeing today.
We'll never be threatened by a nuclear-armed Iran.
There are multiple political risks for Trump. It's arguably the most definitive decision and move that he has made since coming into office for the second time.
With the big U.S. military buildup that had occurred, there was an assumption that there would be some form of military action.
One of the tenets of that America First policy was no new wars. And now he started a war.
Everyone in this region, including the Gulf states, had underestimated the scale and the breadth of the Iranian response.
The president campaigned as a candidate in 2024 as someone who upheld the America First policy. And it's important to note that he's started this war in the middle of what is an election year. The president decided that this was the window to do it and made very clear that he wanted to see what he called regime change.
I think one of the biggest fears is the unintended consequences of pursuing a war without a clear objective.
The biggest political thorn in his side, at least as far as his base has been concerned, is the Jeffrey Epstein files. But Iran has the potential to be high up on that list, potentially equal with that. There's the economic risk, which then has a potential impact on the elections as well. And that is, if the fallout from this war leads to higher oil prices, and that translates to higher gasoline prices, then that takes away a really, really important talking point for President Trump that will hurt his chances of maintaining Republican control of Congress.
For the Gulf states, the priority here is somehow to bring down the temperature. And perhaps the off-ramp could come from using their political personal leverage with President Trump. A lot of this is guessing, and at this point, there are no signs yet that the system is beginning to change on the ground within Iran. And subscribers can see that documentary in full on the terminal or at Bloomberg.com, and it will be up later on the Bloomberg Originals YouTube channel, so check it out. Okay, it's Friday, and I thought we'd look back at some of the price action this week. Over the course of the week, this is going back to last Friday. I should also flag that S&P obviously is not open for trading, but this is the change in price that we've had over the course of the week. And it's quite clear just from looking at this, I don't even need to tell you, the U.S. markets have been massive outperformers this week, so it's only dropped around 0.7%. Not the same for Europe, down almost 6%. Asia-Pacific indices down 6.4%. And emerging market index, this is the MSCI emerging market index as a whole, seeing losses of 6.5%. So we've seen resilience in the U.S., but less so in other parts of the world, which I thought was really interesting to note if we sort of zoom out and take a global perspective on how many of these countries have been responding. And not least because why? The energy implications. You think about where the big gas importers are. It's Europe. Where the big oil importers, it's Asia. This is being demonstrated in the performance of the indices this week. But let's switch over because, of course, everyone wants to see how oil is done over the course of the week, up 17%. So even though the Trump administration has introduced several measures to try to mitigate the price spike, it hasn't really had that much of an impact. And as we were just speaking about with Ziad, the ongoing disruption and the effective closure of the Strait of Hormuz is leading to a squeeze in physical supply. It's not just a geopolitical premium. Take a look at gas prices, up almost 60% over the course of the week. Gold, interestingly enough, has not performed how I thought it would. We've probably seen some profit taking there, down 3% over the course of this week. But the dollar it's behaving like a safe haven, perhaps more so than gold these days, up 1.4% throughout the course of this week. But that is it for Horizons Middle East and Africa. Hoping that we get a more peaceful weekend. I'm Jelana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.